Welcome, everybody. Looks like Elke is just getting into position there. Okay, we've got a distinguished panel. I think we're just jumping straight in. We've got a distinguished panel here today, 3 risky women and Matt. So thank you all for joining us, and we've got lots to talk about. I'll let each of you introduce yourself quickly, tell us a little bit about you and about your organisation as well. So let's start with Archana.
Hi everyone, and thank you, Kimberley. My name is Archana Kotecha. I'm a human rights lawyer. I have been working in the space of counter-trafficking and exploitation for the last 15 years, primarily working on cases of victims, advising governments on legal policy frameworks, and working with the private sector on grievance mechanisms more recently. I was Asia Region Director and Head of Legal for Liberty Shared for 7 years, and I have recently set up a social enterprise in Hong Kong named the Remedy Project. It's a pleasure to be here. Thanks for having me.
Thank you. And Elke will just go up the side of the screen.
Yeah, pleasure to be here. Great to meet you again, Kimberley. My name is Elke Biechele. I'm the CEO of RisikoTek. RisikoTek is a company that is specializing in the detection of financial crime. We have developed software that takes deep dives into our business is fraudulent, and is the supply chain fraudulent, and if so, if you have been defrauded, where is your opponent's money? So that's what we're specializing in. And as a background, so I'm a banker. I had over 20 years in the banking industry, working for some of the largest banks, including the European Central Bank, being a regulator in the profile. And so integrating the accession countries into the European Union framework is certainly one of the most exciting achievements in my career. And I left the banking industry as a global head and in risk management. And so now I've set up my own company and off to very new adventures. What I've learned is in banking, there's so much compliance and we're all squeaky clean, but it doesn't really prepare us too well for who are the customers of the banks. And how much is out there, that it has totally taken me by surprise on how infiltrated the world is, so by crooks and criminals. So on this nice note, I'll pass on to Matt.
Yes, last but not least, Matthew.
Hi, my name is Matt Friedman. I've been working on this issue for about 35 years. I started my career with USAID, being posted in Nepal, Bangladesh, and Thailand. Then I switched over to the United Nations. And now I'm the CEO of an organization called the Mekong Club, which works with the private sector in a positive, supportive way to help them to understand the issue, what needs to be done, and how to fix things. So we do a lot of tool development, a lot of training, a lot of consultation, and that basically helps us to engage in a way that adds value to their understanding and response.
Fantastic. So I'm Kimberley Cole, and I'm lucky enough to moderate the panel today. I am Chief Risky Women and have a network to connect, celebrate, and champion women in risk regulation and compliance. And in my day job, I'm actually head of sales and marketing globally at Link. Link's a knowledge platform that provides expert access. And today, I think we're going to show the power of speaking to experts to really understand a challenge, gain insight, and hopefully get some ideas about the actions that we can all take. So it's a pleasure to have everyone here, and I've managed to work with all of these individuals before in different ways, and they are just so knowledgeable. So we've got several areas to tackle today. Tackling slavery, we think should be part of the ESG agenda, which is so popular at the moment, and we'll share more on how we try to amplify that S in ES and G. And as some of the audience may not be fully across all of the challenges in slavery and supply chains and the banking sector, we'll try to help define the challenge, why you and your institution should care about it, and we'll look for some best practices across regulation, technology, and how we can all take meaningful action. So let's kick off by kind of setting the scene and defining the size and scale of the problem. The ILO estimates that the profits generated from trafficking in persons are at 150 billion annually, and that's 3 times the profit of Apple. So it's a huge, huge issue, and that money is going all through our financial institutions. So the risk is high, and it's a topic that really needs greater attention. Certainly, Matt and Archana have put a lot of attention on this for many years and can give us a lot of really good examples. But can I just kick off with Matt, and can you give us more details on really the size and scale of the challenge?
Thank you very much for that. Yeah, I mean, the estimated number of people in modern slavery is about 40 million people. Out of that, 15 million would be people who are tricked and deceived into forced marriages that are used for the purpose of their employment within the marriage situation. The other 25 million would be associated with forced labor, and 16 million of that would be associated with supply chains, where our food, our electronics, where we get our fish and our food and so forth. So obviously this is a topic that the private sector has to be interested in addressing. The reason why the private sector has been drawn into this is partly because, according to the statistics, out of the 40 million people in modern slavery last year and for the last 10 years, the world has only been helping around 100,000 people out of modern slavery. That's 0.2%, not even a 0.5%. And so we're dealing with a large number of people who are in dire need for somebody to come in. The NGOs, the United Nations, the governments haven't been able to do it. So regulators and country leadership has decided, well, we need to bring the private sector into this. To put that $150 billion profit that the private sector gains into perspective, that means in an hour, the criminals are making about $17 million, or about $285,000 per minute. So these are huge numbers. The last thing I'll say, it's estimated there's around 9.2 million people entering per year into modern slavery. That translates to about 25,200 per day, or a new slave every 4 seconds. So if we count to 4, 1, 2, 3, 4, somewhere in the world, somebody's entering, and the drum beats on and on and on.
Yeah, it's staggering. $17 million in an hour, so it's an incredibly profitable crime. So let's start by looking at slavery as a financial crime. There's been some very big cases recently, like the Westpac AML fine. So let's sort of look at what is being done by banks and some of the situations. So Archana, maybe can I start with you, and can you tell us about your work with financial institutions and what kind of things they should be looking to do?
Sure, Kimberley. So my work with financial institutions started about 9 years ago with Liberty Shed, and Liberty Shed was one of the pioneering organizations to really look at and discuss and bring to the table money flows relating to human trafficking. And this whole idea that if one was to look at the money flows and disrupted the money flows themselves and identified them correctly, then there would be a better opportunity at dismantling networks, because trafficking is a network-based crime. It's really a person trafficking multiple people. It's a whole process, it's a structure, and it's a network. And so we started very sort of basic with going into banks and speaking to financial crime compliance teams around what does this crime look like? What shape does it take across different geographies? What are some of the basic resources that you can look at? The next step was to try and improve the data bank that existed around these crimes. So basically gathering evidence that was in the public domain from lots of local jurisdictions and service providers and helping filter those into WorldCheck, so that there was a better opportunity for those financial institutions who wanted the information to actually find it. The third thing we did was to really start looking at how KYC processes could be improved by expanding the search terms that one could use for adverse media checks. And then, one of the jewels in the crown was really building typologies of what slavery looks like on the ground, because we were we had access to and were privy to what these cases look like on the ground, the number of victims they involved, the scale of company and corporate structure that were involved, the money transactions, etc. So we were able to start building these typologies and sharing them with law enforcement, with banks, through various MOUs that we had in place. And that suddenly gave a face and a feel to the problem that financial institutions understood, because they used this sort of typology-based risk assessment in other areas of their work, and it responded well. It was a very good way of translating data from the front line onto the front desk. And I guess, from there, we just really took off and started to really look at regulators. So we engaged a lot with the Hong Kong regulators. We did a lot of work with the Financial Action Task Force and were instrumental in drafting the recommendations that were made in the July 2018 really important guidance put out by the Financial Action Task Force on case typologies relating to human trafficking. So there was a real plethora of actions that we took. Now, in relation to the case profiles and what we're seeing, we're not seeing as much regulatory action against banks and financial institutions as one would expect. And I suspect one of the big reasons is because this is still not an issue that is high on the agenda of regulators. And there is very little guidance that is put out in relation to this issue as well by local regulators to banks. And it's been one of those things that is still perceived as fluffy on the side, although that is changing slowly. There have been cases primarily related to sex trafficking, the Epstein case, and the ANZ child trafficking scandal, and a few others that have sort of drawn attention. But on a more positive note, there was a recent case involving land dispute and land grabs of Cambodian farmers by a sugar industry tycoon. And ANZ Bank, that was involved in financing the company of the tycoon, actually stepped up and provided a settlement to hundreds of farmers who were aggrieved by the loss of their land. Now, it's important to emphasize that in this particular case, there was no regulatory action against ANZ, no legal enforcement. This was a purely voluntary arrangement. So although this was not a trafficking case, one can see that in this human rights violation scenario, there was a stepping up in order to actually provide some form of remedy. And this is becoming something quite interesting that I'm seeing in the course of my work now, where banks are looking to get involved in the provision of remedies for violations that they have indirectly and unknowingly supported.
Yeah, which is interesting to take that sort of proactive approach. You mentioned one of the cases there that I thought I'd ask Matt about, which is, I think, Westpac, not ANZ, with the child trafficking, and obviously resulted in huge fines. How do you see that as shaping and making the sort of risk profile evolve, or the risk assessment and methodologies evolve, Matt?
In order to kind of jump into that case, we have to go back 10 years. 10 years ago, when the statistics related to modern slavery weren't really well articulated, when you talk to the banks, they would say, well, we feel bad for the manufacturers and the retailers. They have to face this, but this is a topic that's in kind of a realm that's kind of fluffy and doesn't have much direct relevance. And so, we really don't think it's something that we need to address in a more assertive way. Gradually over time, as the statistics, as the data begin to get better, the banks recognize that if you're dealing with $150 billion a year that's generated from this illicit activity, they better be looking at it. But it was still kind of in that realm of, well, maybe someday somebody will be fined, maybe someday it will have kind of an impact, but it seemed like it was far away. Prior to Westpac, you saw there was a number of other organizations that were fined. One particular case, I think, was $64 million, another one, $32 million. In the overall scheme of things, those kind of fines aren't huge, but when the Westpac version came in, you were seeing basically 1.3 billion Australian dollars, which is a large amount of money. And probably more importantly, the kind of reputational loss as a result of something like this was significant, You had a situation where in the Philippines, you had children that were doing live sex acts. It was being broadcast to different places around the world. Transactions were taking place. These transactions were, for the most part, kind of available in terms of somebody being able to kind of see them and do something. And as a result of that, these fines were given over to that particular bank. As a result of this process and kind of an emerging sense of the importance of this particular topic, you're seeing a lot of banks assertively and aggressively doing what they can to, as Archana mentioned, identify typologies, not just for online sexual exploitation of children, but just about anything and everything they can find. Now, the early typologies were kind of very general. They didn't really allow for kind of the red flag, nefarious kind of transactions to be identified. What we're beginning to see is much more emphasis of banks and consortium of banks coming together and looking at these red flags and are starting to apply them to big data to see whether or not you can look for patterns, and then to use the positives and the negatives to refine and improve the situation to allow for the financial institutions to be able to see whether or not there may be nefarious activities taking place. I think you're going to see a lot more of that in the future. Kind of like where drug trafficking was 20 years ago, we are kind of with human trafficking, but you're talking about, depending upon who you talk to, either the second or the third largest transnational crime. So we're talking about a big deal here. And it's something that seems to, from a lot of organizations, kind of just sprung up. But what's happening now is the financial institutions are doing everything they can to catch up. And I think you're going to see a lot of very significant positive changes in the future as a result of them getting more and more behind putting in systems and procedures to protect their organization.
I guess, Kimberley, just to add to that very quickly, one of the nuances and spin-offs really has been the supply chain risk element, because previously the focus was just human trafficking itself, but actually the supply chain risk has really crystallized recently. And one of the things we've seen is a lot of banks are de-risking. So they're shutting down accounts relating to Malaysian palm oil, Indonesian palm oil. When one does it, the other one picks up too, because of the significant legal, financial, and reputational risks associated with this, but also because of the interest of ESG investors in this particular area as such, which has driven a lot of, sort of proactive action around de-risking.
Excellent. That's exactly where I want to head, which is putting that ESG lens on and looking at supply chains and that third-party risk. And Elke, you wrote an article recently for Regulation Asia that was talking about what Asia could learn from the German supply chain law. So tell us a little bit more about that to open the discussion.
Yeah, absolutely. So that fits in very well with what both Matt and Archana said. So the topic is being addressed now at the legislative level. And Germany seems to be world leader in spearheading something what is a little bit controversial at the same time. So the law says you need to know your supplier and your supplier's supplier. And if we find an incident of ESG violation, being human trafficking or environmental omissions, then we fine you up to 2% of your annual revenue. And so this is for like the largest manufacturers. This is could be decimating as well, and it could be, in my opinion, it will have, and Archana just also confirmed this, I think, in your view, it could have a real detrimental effect on banks again, something banks need to start taking seriously and start getting prepared for, very similar to what we've seen in the credit crisis, and banks were not prepared. And now this law is coming, so it will result in huge fines, and there will be examples being posted to both the manufacturers and the banks, and huge fines in the billions will be handed out. But it's human trafficking. It's a nice topic, or not so nice topic, but a human topic, and so I think the industries are probably a little bit too slow to adapt and to put in detection. So the current way how it's dealt with is there's lots of due diligence, and but then it still is the case. So how come supply chain is getting infiltrated? And we know from living in Asia, you can go over to Cambodia, you can see the work conditions, you can go over to Bangladesh. And sort of Asia is like the manufacturing ground for the Western world. And if we are now having this law in place where large fines are being given, then things like de-risking could very much take place. So the Asian and other developing nations, they're very slow in digitization. They're very slow on purpose, I guess, in sharing of data. And all this is hindering the actual detection at scale. So if you do want to get a clear view on what is my supply chain doing and what are their suppliers doing, then it's a manual process, much like for banks it was the SMEs. It's not digitized. It's too cumbersome to do, and very soon, sort of only the large players will survive. And what we've seen in the credit crisis, that before 2008, everybody was trading with everyone. After 2008, America, Europe is trading, and then China is trading with Africa and South America. And we could very much see something like this as well. So the message here, I think, is we need to get prepared and take this topic seriously.
Yeah, and we'll come back and talk a bit more about data and some of the work that you're doing around detection. But just back into the sort of regulatory changes, what other best practices have you seen, Archana, in terms of regulation?
I mean, just to pick up what Elke was saying earlier, another feature of the German law, actually, which is also present in the French law, the devoir de vigilance, is very much that an NGO or a trade union can actually bring a case in Germany on behalf of victims through an extended supply chain in German courts under existing laws. It's very interesting because it opens up a whole new avenue of legal liability, which wasn't there before. And this extends to the entire supply chain. So it could be relating to harms that happened in a faraway land from Germany, but yet there is accountability that sits and lies in Germany. We are seeing this trend catching. The European Parliament is also considering a law around mandatory human rights due diligence, which essentially is an extension of what Elke was talking about. The question is, how much bite will it have? Because previous iterations of the law have been fairly loose and have been around disclosures, but actually it's getting tighter as we go. In Hong Kong, more recently, we saw that the Hong Kong Exchange put out a consultation looking to peg the ESG reporting to the corporate governance code. This should have happened a very long time ago. It's a fundamental part of directors' duties, and it's a salient risk to the operation of businesses as well. I think what's been really interesting has been also the focus on banks in relation to human rights violations on a more general basis. So many of you will know that BNP Paribas has had 2 cases opened against it for financing or providing financing and access to global markets to the Sudanese regime. And a number of Sudanese individuals have filed cases for complicity in crimes against humanity. That both of those cases have been allowed to proceed in France, but also in the United States. And it's also a sort of, very signifying of the fact that the tide is changing and the courts are a lot more open to engage on this issue and to find liability at the level of financial institutions and not just the direct perpetrators of the genocide or of human trafficking.
And Matt, you also recently participated in a white paper with White and Case that focused on investor myths around putting that S back into ES and G. What were the kind of key findings that you revealed in that report?
Well, one of the things that we have been hearing for many, many, many years is that the E and the G, well metriced, well measured, but the S is kind of the orphan that's off to the side that people say you can't really do anything with it and so forth. And so there was a working group that included Refinitiv, the Mekong Club, Reuters, White and Case, and others that came together to kind of look at what were some of the reasons that were often cited related to why S was not necessarily material. Why is it that people shouldn't be focusing on it, and why perhaps should it stay in that lesser kind of situation. As a result of this process, we analyzed the data that we had and got it down to 5 specific myths. The first one was that social performance is less financially material than E, when in fact that's not necessarily the case. There's a tremendous amount of risk associated with the S, especially when you're talking about forced labor, child labor, various other things that fall within kind of a human rights lens. It is difficult to know how and where to start assessing the S. Well, in reality, businesses looking at human rights, this is not something that's new. It's been around for a while. The businesses have been focusing on this, analyzing this, tracking this for some time. They just haven't tracked it within the framework of an ESG standard indicator set. So basically, the information is available, and it can be and should be used in order to move things forward. It's just hard to measure. There is no comparable data. Well, there's a tremendous amount of data related to supply chains. You have audits, you have all kinds of audit findings, you have various kind of transaction data footprints and so forth. And so there is data, and the data is available, and the data can be used in order to kind of use this as a metric for determining whether or not financial institutions are doing what they need to do in order to protect things. Qualitative surveys or questionnaires are best method for tackling social issues of S. And I've heard this from the time I was working with USAID and my time during the United Nations, where people said, well, human rights, the only way you can really address it is with qualitative surveys. And in fact, most of the people working in the human trafficking sector related to research have qualitative backgrounds. But the reality is once again, there are sentinel surveillance surveys, other tools that are available that would allow for us to be able to measure what's happening related to human rights as it relates to businesses and so forth. So this is another debunked myth. S indicators only relevant for impact indicators, and that's again not true. There's a lot of elements of profitability that could be measured related to companies that demonstrate that when they use ESG as a means of demonstrating that they really kind of do care about their interaction with the planet, with communities and workers, will have an investment plus. And so this report was put out in order to get the discussion going, in order to help people to understand that there needs to be more standardization related to the S, and that standardization has to go across not only the businesses, but the standard holders themselves.
So, I mean, interesting there, because maybe we can take a step back and talk to Elke on you are looking at detection and using your technology platform to do that. So tell us a bit more about how you are using that to identify risks in the supply chain.
Yeah, absolutely. So we're also, it's the end of the era of self-certification. I think what is needed is to do this, to independently verify what has been told about about the ESG compliance and what is the real picture. So Archana mentioned typologies, and Matt mentioned all the data that is available. And so we're taking in both, and we are looking at independently verifying what is the true story of a supplier, and so we're building out the wider, the transnational picture of a supplier, and we're seeing how are they really set up, and what is known about what kind of revenue do they have? Do they publish annual returns? Do they publish salaries in these annual returns? And how does that compare to the actual profits? And so we can work our way backwards of, is there a gap in explanation? And then we also look at other pieces of data that tells us how much is this company really importing and exporting, and what kind of suppliers do they really have, and have they declared all their suppliers? And so then we go into further depth of, okay, now we know who their suppliers are, but who are the suppliers of the suppliers? And for that kind of in-depth research, you do need technology. no human can do this at large scale when these large manufacturers have like 40,000 suppliers. So you can't possibly build up like what's the transnational framework of the supplier, what is the true story of this company, and then the suppliers of the suppliers. And so we've built technology exactly to do that. And we are also embarking on a very exciting project. And this is a little premature to say, but it's an exciting project that we're going to work on, funded by a government. And this is about the identification of the illicit transactions. So what we have found, for example, in the counterfeiting space, is that criminals have become wealthier by some extortionate number, like 400 trillion or so, which equals the GDP of Germany, France, and the UK. And that's as much amount as they have amassed in the last 10 years. So their dirty money is everywhere, and everyone is impacted. And so we are using this in order to identify what is the actual true scale of illicit and dirty transactions that go through the supply chain. And so we are using AI and machine learning to ingest. So we're ingesting this large database from the beginning of like the 20,000s. So it's from the year 2000 to now. And we're using AI and machine learning. We are taking the typologies that have been identified for like ESG-related typologies, also counterfeit typologies or tax evasion typologies, in order to identify what is the how do these patterns really look like. So some typologies we know, but others we actually don't know. And given the extent of the organized crime that is there, and the dark market, in my personal opinion, is like 5 or 10 times higher to the statistics that we can read. And so it's a much bigger market. And so we're using the AI machine learning in order to identify what are the other patterns that we don't know, and how big is this problem actually really. And so with that knowledge, it should then be very soon, so it should make a massive dent into cleaning up the supply chain, and in particular taking care of like human and wildlife issues that are like the weakest parts of the supply chain. It's the environmental crime that goes with it, and the crime against humanity.
Absolutely. So I'm sure there's lots more technology and other solutions that we can talk about as well. Archana, just back to you on, so what is the Remedy project doing around speedier solutions to tackle forced labour and supply chains?
I just want to make two very quick points on data, picking up from where Elke left. Sorry, yeah. I just can't let this one go. So one is the $150 billion figure. This is a really old figure now. It's been out years, and last time it was revised from 32 billion to 150 billion. So by any stretch of the imagination, that is but a very, very conservative estimate of the value. And actually the reason why I bring this up now is because it's very representative of data pools relating to human trafficking and exploitation, because again there are so many difficulties with actually reaching populations right now because of COVID and everything else that's been going on for the last 2 years. It's created a degree of opacity in the type of data that is really available. And also a lot of the data pools that are available don't actually include data that NGOs and a lot of civil society actors are sitting on and are privy of. And when you look at it from a practitioner's perspective, there is often a big nuance between what you see on the ground and what the data sets at a high level are actually representing. So there is always a skew in the information available, and that's just something to think about. Now, back to the Remedy project.
On this note, just one comment. I know, but so we are also looking into like officially shared data, not just empirical data from other data sources, but the actual data that is shared. And there's also, at this point, there's also, I think, the need to emphasize that we need to have more public-private partnerships so that governments can share the data, and so that everyone can get a really good idea what is really happening.
Thank you.
Very good point. The Remedy project, and then it'd be interesting to hear about the financial collaboration as well from you, Matt.
Yeah, I set up the Remedy project last year in October, and the idea was really to take advantage of all of these new laws that were coming into place around mandatory human rights due diligence, modern slavery disclosures, etc., that were creating a lot more leverage and pressure across supply chains, but from the buyer's end. So eventually the belief was that there would be a ripple effect, and that further down in the supply chains, there would have to be a raising of the standards in order to manage and identify liability correctly. So we started to build a remediation mechanism that essentially doubles up as a due diligence mechanism that allows early detection of problems that are arising that may potentially snowball into exploitation. These systems are designed by co-creation between workers and companies both, so that the design is a design that is trusted by workers. They are likely to use it to put their grievances through and to have resolution to it. Where it differs slightly is not only that it is co-created by workers, but also there is a very strong element in the remediation process that involves going back into the underlying corporate governance deficiencies and addressing those. So at the moment, bringing it back to financial institutions, we are also looking at the role that financial institutions can play in providing remedy for some of the harms caused by their clients and by their inability to pick up the fact that this harm was likely to happen. We've seen cases all over the world where courts are making this relationship of proximity, which essentially means that just because you're the financial institution one step further away from the actual scene of exploitation doesn't mean that you're safe. And one of the ways of identifying and managing risk is for financial institutions to use their leverage on companies to say, we expect you to have due diligence, grievance systems, etc., so that there is better quality data, more visibility of risk, and better risk management and corrective action planning. So, as you know, very focused on migrant worker rights. So for us, a lot of this is about looking at not just issues of exploitation affecting workers, but also underlying corporate governance issues that are giving rise to exploitation.
So back to you, Matt, around collaboration, how we're getting data sharing between financial institutions and some of the work that you've been doing here in Asia.
Yeah, the Mekong Club has two mechanisms for working with the financial institutions. One is an association working group that is part of our membership, and the other one is a collaboration with Reuters, the Asia Pacific Banks Alliance. Part of that process, these organizations meet on a regular basis. During the time we meet, we debate, we discuss, we identify what they think is needed in order to better understand the situation. As I mentioned, typologies has been a really important part of that. Typologies then lead to red flag transactions that could potentially be indicators of nefarious activities taking place, and then using this to apply patterns to big data using AI and other kind of mechanisms in order to find out whether or not those patterns in fact are modern slavery. In addition to that, as part of both of these groups, the discussion of blockchain technology has come up. And so as a suggestion for the banks to basically have a better sense of how blockchain could be used, we kind of teamed up with an organization called Diginex and developed a tool called eMin, where we use blockchain technology basically to kind of combine the recruitment agency with the recruitee, blockchain the information and make it available to factories. And then so that when the brands come in, they can go and look to determine whether or not there's indebtedness that's taking place, any anomalies and so forth. But as a result of this journey, we came to realize that many more things could be blockchained. I can't talk about the details of this because it'll be coming out soon, but it's a mechanism that we are working with Diginex and others to be able to, in a factory situation, blockchain, the employees, the employee work schedules, who's doing what under various circumstances, to offer an immutable, transparent kind of description or a summation of what's happening in those particular units. And so I think what you're going to see over time is much more of an emphasis of using practical online tools that will really help the banks to understand the scenarios that are out there so that they can prepare whatever they need to do in order to protect their business.
Brilliant. So, I mean, that's great to hear that there are some good solutions that are coming out using technology, using regulation, using a whole, range of tools at our disposal. What I'd like to do, we've got 5 minutes left, is actually go around to each of you and have you either give us another best practice or leading solution that you see to the challenge, or a key takeaway that you would like the audience to leave with to take some action themselves. So if I can start with Elke.
Yeah, I think the key takeaway, since it's a huge topic and the emotions are heating up, so I think it's the time. The time is now to get prepared. And that is for banks and as well as for manufacturers. The laws are now in place, and I'm very pleased to hear from Archana that it's transnational now, so you can file from a violation happening anywhere in the world. You can go to a court in Germany and fight your case, which is, I think, phenomenal news. And so it's important to get prepared. It's important to understand what tools are available. And also to know that there are tools already available in order to detect supply chain violations right now and ESG violations. It's already there, and it's a matter of what data can be used and what data is available, and then the knowledge in putting those together in order to achieve that we get much more transparency on what is really going on in the supply chain, and how vulnerable are we for human and for wildlife.
So go Matt and then Archana, and I think it's almost a wrap.
I think one of the takeaways are that the banks are taking this a lot more seriously. They're putting in the effort in order to identify the systems and procedures to be able to address this, and they're applying technology to this. The other one would be related to ESG. It used to be that companies were judged on profit, prestige, and growth. Now with COVID, you have a situation where the other expectation is that you have a positive interface with the planet, with communities, with workers, and so forth. And that trend is almost on steroids now. You see a significant increase in people's interest in this, not just from the investment community, but from lay people who have retirement funds in Canada that are concerned about their investments being used in a way that would potentially hurt workers. And so this trend will continue. I think it'll be regulated very soon. And as a result of that, perhaps we will have a system and procedure in place that will really allow for the world to have a better sense of what banks, financial institutions are doing as it relates to this particular topic.
And Archana.
I'd just like to say that, over the last 2 years, we saw with the impact of COVID that, workers had billions wiped off their I hesitate to say wealth, billions wiped off in terms of lost wages, unpaid wages, etc., leaving communities and entire nations in poverty and in very difficult conditions, even more prone to exploitation than they previously were. There have been a lot of factory closures, job losses, lack of access to support, and very fundamental, requirements that these populations have. I think with all of this in mind, and also bearing in mind that the regulatory net is closing in very quickly, and that the regulations are not going to apply just to manufacturers, but they're also going to be applicable to those who are propping up manufacturers, then, it is imperative that better action is taken, not just to understand the diversity of risk and risk profile, but also the different strategies in mitigation. Some of it could take a very proactive form like the ANZ example, or others could be a lot more in terms of leverage that is exercised by financial institutions on their clients in order to raise standards of detection and management of risk. Thank you.
So thank you all very much for joining us, and I think that was a fantastic panel, so thank you, and we look forward to the next panel, which is a related topic with wildlife and environmental risk and challenges.
Thank you.
Thank you, Kimberley. Bye-bye.
Thank you.
Bye.